Now, I've spent months refining this code in TradingView, preparing and editing this tutorial so that literally anyone can automate their own no nonsense Forex trading strategy for free in one video. And well, in a very long video. Now, I've been coding up trading strategies on this channel for some time now, where at the start of this channel, VP himself actually shouted out my channel because he felt that it was the best place to learn how to automate your very own trading strategies in TradingView. Now, since then, there have been some changes to TradingView where basically this tutorial is the updated version of all of my No Nonsense Forex TradingView content, all in one video, all for Pinescript version 5. So what does that mean? That means that by the end of this video, you'll be able to have your very own No Nonsense Forex trading strategy template where you can have the confidence to be able to add in your own indicators and your own nuances and be able to automate your trading strategy, test it and optimize it yourself. Now, I acknowledge that this is a very long tutorial. However, I've tried to keep things as short, sharp and sweet as possible. So at some points I may actually go through some of the content relatively quickly. However, at any point in time when you feel like you do get stuck, by all means, you can pause, rewind and replay some of the content until you have everything that you need to know and everything is working on your end before moving on to the next stage. If you're still stuck, well, you can always leave a comment or join the Discord and ask your questions there. Links are in the description. Another link that's in the description is a link to my GitHub, and that's going to be important because there I'll actually leave a link to the very own source code of this tutorial so that way you can have the code and go ahead and use it straight away, use it as a template, or even better, use it to actually validate the work that you are doing to make sure that everything on your end is matching everything that I've provided to you. Now, finally, I just want to assume that most of the people that do come across this video will probably know what No Nonsense Forex is. However, if you don't, well, no stress, because you'll be able to follow along in this tutorial and well learn what No Nonsense Forex is, or just be able to learn how to automate your very own trading strategies. Nonetheless, you'll be able to take a lot away from this video. So I hope you're really excited for this one, and I hope you've grabbed a coffee and some snacks because I know it's going to be a long one. So without further ado, let's go into Pinescript version 5 and start coding up our very own No Nonsense Forex trading strategy. Now that we've got TradingView open, we can start coding up our trading robot by opening up the Pine editor, and we can create a blank script by going to open and blank strategy, and that will create our trading robot. Now what I'm going to do is copy over the following code, which is available on my GitHub. Alternatively, if you are following along in this video, you can code it all up yourself. But if you want a head start, again, please feel free to go over to my GitHub, and this is the file TradingView NNFX blank template. Now, this is the template that we're going to be filling out for this video, and this is what is going to form the basis of our No Nonsense Forex strategy template. Now, at the top is just some commentary about what the trading strategy does. In line 15, we are declaring that we are using version 5 of Pinescript. This is of course a strategy, and we're naming the strategy NNFX strategy template. We're using overlay equals true, which means that any plot functions that we use is going to actually plot onto the chart. Now this is important here. I've declared that we're using account currency as United States dollar. Now, if you do wish to use an alternative account currency, then feel free to populate this. Now this is going to be important when we move on to the next step, which is actually going to be doing currency conversion based off the account currency. So if you are using USD, then this is going to be fairly simple copy and paste. However, if you're using an alternative account currency, then you might have to do some conversion. I've stated that we've got an initial capital of $10,000. And we are using pyramiding equal to 2, which is essentially how many open trades we can have at any given time. And this is a maximum of 2. Now in the following section, what I want to highlight here is that this is basically where we are going to be inserting all of our indicators. Now this is going to be very useful because if you are using alternative indicators and if you are grabbing this straight from the GitHub, then this is where you're going to actually put in your indicators for your No Nonsense Forex trading strategy over here. So you put in all your indicators at the very front, and then the rest of the trading strategy is going to calculate all the other no nonsense Forex conditions within the trading strategy itself. So basically all you need to do is put in your indicators, which is why this is going to be very powerful moving forward. The first section is going to be, of course, our first confirmation indicator. The second section is our second confirmation indicator. We've got a volume indicator, baseline, exit indicator, and a continuation trades indicator. Now following that, this is the completed section. Of course, it's not completed yet because we need to code it, but once it's all coded, then you shouldn't have to touch anything below this completed section. If you are following the full No Nonsense Forex trading strategy now, you can, of course, put in your own code if you are doing any alterations to the No Nonsense Forex trading strategy down below. Or if you are using alternative currency other than United States dollar, this is where you would make those changes. The first component within the completed section is the backtesting date range. This is going to help us to, of course, select what date range we want to backtest against. We have a currency conversion section, which, as mentioned, this is where we actually need to stipulate the currency conversion required to match our account currency, and we're going to code that just in a second. We're using ATR money management, of course, as per No Nonsense Forex. We've got some user input conditions, and I'll go through that later on in the video, what these are. And this is one for every indicator that we're using. So C1, C2 volume, baseline, and exit indicator. And now we have the continuation trade section, which is going to calculate our conditions for continuation trades. We have the one candle rule, which again is a No Nonsense Forex nuance, which we'll be calculating here. Bridge too far, another nuance. The baseline and the ATR rule. And with that done, that essentially completes all of our rules for our entry conditions. So with that, we can actually enter trades and stipulate the conditions for the trading strategy. And that goes into this section, entry conditions. Then once those conditions are met, then we of course can populate entry orders and actually take the trades and open trades. Once trades are open, we can calculate take profit and stop loss. And that is also inclusive of our trailing stop loss conditions. And finally, we have exit orders and then close orders, which comes from our exit indicator. Now, I hope you were able to follow along in the setup template for this tutorial, and I'm sure you'll be able to appreciate there's quite a bit to the No Nonsense Forex trading strategy, and hence why this video is going to be quite long. However, we're going to break everything down in bite-sized chunks. And the first chunk that we are going to tackle is actually setting up our code so that way we can add in a backtesting date range as well as a currency conversion. Now, the backtesting date range is going to be extremely important because this is how we are going to be able to test in sample and out of sample data. Of course, very useful when we are trying to test and optimize trading strategies. The next thing, of course, is a currency conversion. This strategy is, as of course you know, a Forex trading strategy. And this is where we need to be sure that we are taking into consideration the effects to our account currency when we are trading all Forex currency pairs. Now, as mentioned, the account currency that I'll be using is the United States dollar. However, if you've got a different account currency, then I think you should be able to follow along and make your own changes in your code so that you can have the suitable account currency that meets your requirements. So without further ado, let's go back into Pinescript and see how we code up those two. In Tradingview, we're going to start off by completing the backtesting date range, and I'm going to first include the following variables. Now, these are input functions for the start day, start month, start year, end day, year month, and end year, which is going to form part of the date range that we are going to be testing for our trading strategy. With those input functions, we can then actually specify the start date and the end date using the timestamp function as shown. And then finally, what we can do is insert a date range condition where we can specify an if condition that if the time is greater than or equal to the start date and the time is less than or equal to the end date, then our date range function is equal to true. And if the time falls outside of this date range, which is this else condition, then it equals false. Now, just below the date range section, we can do our currency conversion. Now, this is going to be important because, as mentioned, our account currency is equal to United States dollar. Now, if you are using a different or alternative account currency other than United States dollar, then you'll have to change the following code to meet your account currency requirements. I'm not going to go through all of those because, of course, there's almost an endless amount of different account currencies that you can use. So I'm going to have to leave that for you to decide what you want to do. The first thing I'm going to do is insert account currency crosses for my particular account currency, which again is United States dollar. Just underneath this, I can use the symbol info.currency function to actually get the quote currency of the current symbol that is being traded. So for example, if I am trading Aussie yen, then the quote currency is going to be yen. I can then use a switch statement, which will get the conversion from the quote currency that is being traded to the account currency of my account. And this is going to run through all the different currency pairs that I look to be trading within Tradingview. And in this instance, we are going to be using 8 different currency pairs as shown here. Now, if you are looking to trade alternative currency pairs where the quote currency might not be one of the 8 currency pairs that is listed here, then you will have to add that within this switch statement. Again, I'll have to leave this up to you to complete yourself. However, I don't think this should be too challenging, as you can very likely follow along and use this as a template and make the required changes that you need for your particular trading robot. Now, just to make sure that everything compiles and everything is working, I'm going to add this to chart. And it looks like it's compiled. I'll go back to here and there was no errors, added to chart, and we can see here that it's been added to the chart over here. Now, of course, this is not going to do anything because we don't have any trading conditions. Just wanted to make sure that is working. But the first thing that we can see here, if I do go into the indicator settings, is those date ranges that I mentioned before. So we can see here that the trading strategy is going to be testing between 2004 to 2016 in this example. Now, back within Pine Editor, what I'm going to do is actually save this trading strategy, and I'm going to call it NNFX trading strategy template. I'm going to call it tutorial just for this purpose. I'm going to save, and now this is saved as version 1 NNFX strategy template tutorial. Now, with that coded up, that actually completes the template for, in my opinion, what is required for all Forex currency trading strategies. We've got a backtesting date range and we've got an account currency conversion. So that means we can start doing the fun stuff, and that is actually coding up our very own trading strategy. Now, the very first thing that we're going to be doing is adding in our confirmation 1 indicator, or our C1 indicator. And this is going to be a very important part, because depending on your trading strategy, you might want to opt in and include your own indicators. Now, I would recommend, if you're just starting out, following along and actually adding in the indicators that I'll be using. And then once you have the confidence and understanding in terms of how this template works, you can of course go in and add in your very own indicators to follow. So without further ado, let's go in and code up our very first indicator, and that is the confirmation 1 indicator. Now, back in Tradingview, we can start adding in our very first indicator, and that is going to be confirmation indicator 1. So what I'm going to do is actually minimize our Pine editor once it's saved. And I'm going to open up our indicators, metrics, and strategies section. The first indicator that I'm going to be adding in is the Arun indicator as our first confirmation indicator. I'm going to add that to chart. Now, the Arun is a very basic 2 lines cross indicator, and an example is shown over here where we can see that when the orange line crosses above the blue line as shown here, we can see that this is a nice long trade. Now, alternatively, when the orange line crosses under the blue line, we can see here that that is actually a short trade. So with that in mind, we can then add in those strategy conditions within our No Nonsense Forex strategy template, and we can get our trading strategy to take the trades for us. However, we of course need to add the indicator into our trading strategy. And fortunately enough for us, we can get the source code of almost any indicator, so that way we can add that into our trading strategy. Now, the way we do that is by going into our indicator as shown, and we can see here a source code button. So by clicking this, this will actually open up Pine Editor so that way we can actually get this source code and copy it across and over to our No Nonsense Forex strategy. So what I'm going to do, just for simplicity for now, is copy over everything, and then I can go into Open, and then go into NNFX strategy template tutorial, which is the one that I'm using for our tutorial today, and open that back up. Now going down into our confirmation indicator 1 section, what I can do is paste everything as shown. Now the first thing that we can do is go through the lines of code and delete the ones that we actually don't need. The first thing that we don't need is this version 5 declaration, because that's already declared at the start. The next thing we can delete is this indicator function here, because we are not using the indicator function. We just want the conditions from the indicator, and so we can actually remove this. The next thing that we can see here is the length, the upper and the lower, which is the indicator calculation functions. And then we can see here that we've also got plot functions as well. Now notice here that the plot function, which is plotting upper, is the upper Arun, which is the orange line, which you might note from previously, that is our orange line on our indicator. And we've got lower, which is the Arun lower, which is the blue line from our indicator. Now it's really important for you to understand when adding in your own indicator, not necessarily how to calculate the conditions of the indicator, but what is happening, so that way you can code up your trading conditions for your indicator. So we can see here that we have determined which variables determine the lines on the indicator, which is this upper and this lower variable. Now, once we have a basic understanding of what our indicator is doing, the first thing that I want to do is just to add in a quick comment here. And the next thing, which is going to be very important for everyone to do, is to actually go in and change the variables declared within our indicator, mainly the ones that use common variables. In this instance, for example, length, upper and lower, I would determine are fairly common variables. Now, the reason for doing this is once we start adding in more indicators, there is very likely going to be more indicators that use the same variable names, which is going to cause errors if we declare the same variable twice. And so what is going to be best practice is just to add in some additional words or text, so that way we can make sure that this is going to be a unique variable name. So a good way of doing this for this example is just to state the indicator that we're using. And I'm just going to call length now Arun length. Now, every time that you make this change, you of course have to go in and find where length was previously declared. We need to change it to the new name. So I can see length was used here. Now I want to do the same thing for upper and lower, because I feel like that could also be declared twice. So I'm going to call it Arun upper. And I'm going to call lower Arun lower. Now I've mentioned the plot functions here. However, what I want to note is that we really don't want to be using plot functions within our No Nonsense Forex trading strategy unless they're on chart indicators, for example, the baseline or moving averages. If they are off-chart indicators like the Arun for this example, it doesn't really make much sense plotting them on the chart. So I'm keeping it here just for now, just so I understand which one is the Arun upper and which one is the Arun lower, but I'm just going to comment them out like so. Now that we got our indicator added in, we can actually insert the trigger conditions for our indicator. Now, a trigger condition is a specific event. For example, when two lines cross, a crossover or a cross under, that is going to symbolize a trigger event. So I've declared a variable called C1 long trigger, as well as C1 short trigger over here. Now C1 long trigger is equal to a neat built-in function within Pinescript, which essentially finds if a crossover occurs after candle confirmation between the Arun upper and the Arun lower. So if there's a crossover that occurs within our indicator, then that is going to be a signal to go long for our C1 indicator. Alternatively, if there is a cross under of the Arun upper and the Arun lower, then that is a signal to go short. Now, once that's all coded up, what I want to do is save, and that should hopefully compile with no issues. That is saved, and now I'm at version 2. And that's our C1 indicator coded up. I hope you're able to follow along, and don't worry, the first time is always the hardest, but once you get the hang of it and add some more, then you'll be able to pick it up in no time. So let's add another one. And that another one is going to be our confirmation 2 indicator. So we added in the Arun, which was a 2 lines cross indicator. So in this one, just to change it up a bit, I'm going to add in the DPO, which is a 0 line cross type indicator, just so that way you can understand the differences between the various types of indicators. Of course, you would understand this if you follow along No Nonsense Forex. So without further ado, let's go into TradingView and let's code up our very own confirmation 2 indicator, which is going to be, as mentioned, the DPO. So again, once that's saved, I'm going to minimize that. And I'm going to go back into indicators, metrics, and strategies, and I'm going to search for DPO, which is going to be our next indicator. I'm going to minimize the Arun, but I'm going to showcase to you the DPO. Again, in the same section that we were looking at from the price, we can see here the DPO indicator as shown. We can see here that this is actually a 0 line cross indicator, where if the indicator is above 0, then that is going to be showing a long trend. And when the DPO value is below 0, that is going to symbolize a short trend. So again, what we want to do is go into the indicator and go to the source code. I've opened up the source code as shown. We can see here that we're using version 5. So again, no conversion is required. I'm going to highlight everything, copy, and then open up our NNFX strategy template tutorial file. Now I'm scrolling down to this section here, insert confirmation indicator 2. And I'm going to insert as shown. Again, I'm going to remove version 5 and I'm going to remove indicator. Don't need any of that. We have sections here which determines what the DPO value is, which I'm not going to touch for now. And then we have some plot functions and a horizontal line function. Again, plot functions within the indicator. We can see here that the plot function is plotting DPO and it's plotting the color, which is a nice color green. And that is symbolizing, of course, our DPO value as per what was shown on the indicator. So we know that this DPO value is what is actually being plotted on our indicator. We have a horizontal line 0, which again is plotted on our indicator, but doesn't really matter too much for us. We know it is a 0 line cross. Again, I'm going to comment this out just for now. And this is what we have to play with. Now, the first thing, of course, that I'm going to do is add in a comment. And as mentioned before, all the variables, I want to make sure that they are unique and won't cause any issues in future. So I'm going to call period DPO underscore period, and I'm going to remove the underscore at the end. And I'm going to go in and make changes where required. Is centered, just to be safe, I'm going to put DPO is centered in there. Bars back. To be safe, why not? Let's make the changes here. And MA, that's a definite one that I'm going to need to change. DPO underscore MA. That MA. And this one's a sneaky one here. I have to make that change there as well. And finally, DPO is being calculated here. Just to keep things neat and tidy, I'm going to put a capital D PO, and that is what is going to be the DPO signal over here. Now, once that is done, we can of course put in our indicator conditions as a filter indicator, which is shown here. So I've declared a variable called C2 long filter. Again, this is a filter, not a trigger. And this is going to be equal to true when the DPO is greater than 0. Likewise, for short trades, C2 short filter, we're going to be looking for trades when DPO is less than 0. Pretty straightforward. Now with that done, I can remove the comments. And that is our DPO coded up. Again, let's test this by adding it to chart. Of course, the trading strategy doesn't do anything at the moment, but it looks like it's compiled and worked successfully. I'm going to save, and that saved successfully. So I hope you're getting the hang of adding in indicators, and if you haven't quite got it yet, well, what better way to hone in on that skill than by, of course, adding in more indicators. Now, this next indicator is going to be very important because it is going to be the backbone of this trading strategy, and that is the ATR, or average true range. Now, this indicator is important because the indicator itself measures volatility, and combining that with money management techniques, well, then you have a volatility adjusted money management trading strategy. Now, I won't go into detail into what that does because, of course, Well, if you know No Nonsense Forex, well, then you know. But if you don't, well, you'll be able to find out as we move forward. So without further explanation, let's go into TradingView and start coding in our ATR or average true range. So again, make sure that everything is saved here before we add in any new indicators. We're going to go back into our indicators, metrics, and strategy section, and we're going to type in ATR. Now we can see here that the ATR is plotted as shown. We're going to go into the source code and we're going to copy everything. Once that's all copied, let's go back into our NNFX strategy. And we're going to scroll down to our ATR money management section. Over here, I'm going to paste our indicator that we just copied over and everything is good to go. So what we want to do is remove, of course, version 5. We want to remove the indicator function. We can see here that this is some calculation that occurs here. And finally, we can see we've got a plot function here. Now, the very first thing I want to do is add in a comment, ATR indicator. And now I want to start customizing the ATR. The first thing is changing length to ATR length. And then changing where required the previous length to ATR length. Now note here that this is the only one that needed to be changed. We didn't need to change any of the lengths which have been identified over here. And that is because this MA function is actually a user-defined function. Now I'm not going to go into detail the specifics that is occurring in this MA function. Just note that the lengths do not need to be changed within here. Now smoothing is going to be changed to ATR smoothing. And what's interesting to note is we can see this error that's showing up over here. This smoothing does need to be changed to ATR smoothing, which is within the function. So I've changed it like so. Now we can see here the plot function again, which is our ATR, is actually plotting what I've highlighted over here. Now this is actually what the ATR is equal to. And what I'm going to do is actually do some other customization, which is actually define a variable which will be ATR, which is equal to what is being plotted over here. So I'm going to copy that and paste that there. And that is actually what our ATR is equal to. Now again, we don't need any plot function. So what I'm going to do is actually remove the plot function here, because now I have a variable which is already defined, which is calculating the ATR based on the above custom function. Now that is our ATR added in. What we can do now is actually put in some money management principles to complete this section. So what we're going to do is declare some custom variables at the very start. And that is going to be our risk percentage, and that is going to be our risk per trade. And by default, I'm going to put this at 2%. We're going to have an ATR multiple profit, and this is going to be our take profit level, which is based on a multiple of the ATR from where we actually entered the trade. So in this example, we are going to be taking profit at 1 times ATR. We've also got an ATR multiple loss, which is going to be our stop loss, which is going to be an ATR multiple distance away from our entry price. With all this information that we currently have coded in, we can actually calculate our position size for each trade. The position size is going to be a rounded value of the initial capital of the trading strategy, which is actually found using strategy.initialcapital. The risk percent, which is defined by default, is 2% risk per trade, divided by the ATR loss multiple by the ATR, which is essentially 1.5 times the ATR, and that is our stop loss distance, divided by our currency multiple, which is our currency conversion multiple. Now this is going to make sure that we have the appropriate position size for each and every trade that we take, only risking 2% on each and every trade, taking into account market volatility, which is what the ATR does. Now this will make any necessary adjustments if we do alter our risk per trade or alter our distance from our entry price, which is our ATR multiple distance. Now, well done if you've been able to follow along and get your trading strategy to compile with no errors thus far, especially if you're relatively new to this coding and automation type of stuff, because I think that that would be a very huge achievement. You've been able to put in your very own indicators into your trading strategy, and I think that is going to be huge. Now, if you made it this far and everything's working, well, we can move on to the next step, and it's probably one of the most important, because this is where we can start actually using the indicators that we've coded up and actually make some trading strategy conditions out of them. So I'm going to show you exactly how to do that now. So let's head back into Pinescript and see how we code up our very first trading condition. Now under the entry conditions section, I've added in the following variables, and that is condition long 1 and condition short 1. And this is essentially where we add in all the conditions for our trading strategy, so that way we can take our appropriate trades based on the conditions of the strategy. Now to start off every trading strategy, it's best practice to add in the following. For long conditions, we only want to be taking trades where the strategy position size is less than or equal to 0. And for short trades, we only want to be taking trades when strategy position size is greater than or equal to 0. This is just to help to ensure that we are not doubling up on trades. For example, if we do have a trade that is already open, which is long, then we don't want to be adding in another long trade to that particular trading strategy, especially with the NNFX trading strategy, when there are multiple different trading strategy triggers that can occur within the strategy. So to be safe, we're going to add in this condition. The next thing we want to add in first is the date range condition to make sure that the strategy tester is only taking trades within the date range that is specified. Now following this is when we can actually add in our first trigger condition. Now I've added in our confirmation 1 long trigger, which we've coded up, which is our Arun indicator. Again, when there is a crossover of the Arun, then this C1 long trigger is going to equal to true. Alternatively, when there is a cross under of the Arun, then C1 short trigger is going to equal to true. And for our final indicator, which we have coded up, we've got our confirmation 2 long filter, and that is our DPO indicator. Again, the conditions are when the DPO is above 0, then this long filter is going to equal to true. Alternatively, when our C2 or confirmation 2 indicator, which is again the DPO, is less than 0, then this is going to equal to true. And essentially, when all of these conditions equal to true, then our condition long 1 is going to equal to true, and that is going to be an indication when we want to take a long trade. Now to highlight that these conditions have been met and we should be entering trades, a good way to do this is to actually plot these conditions. Now the following code is going to plot a shape, and it is going to plot a label, which is going to plot when these conditions are equal to true. So it plots a shape when condition long 1 is met and when a long trade should be taken, or when condition short 1 is met and we should be taking short trades. Now with that coded up, I'm going to add this to the chart. And here we can see that there's no errors that have been made. Again, there's no trades that have been made because we don't actually have any trades just yet. But we can see here that we've got some plot shapes that have occurred. I can remove the ATR because I don't need that for now. But what I do want to highlight is the indicator conditions. We can see here that there has been a crossover of the Arun to go long, and the DPO is greater than 0. So this is actually an indication to go long. Likewise, we have a cross under, and we've got the DPO that is also just below 0, and that is an indication to go short. Now back within Pinescript, we can actually now go into adding in some entry orders. I've just added in the following. Entry order is equal to condition long 1, and entry short is equal to condition short 1. And I've just added in the following code, which is actually going to take trades for us. Now, if we are entering long, then we want to open up 2 trades. As you may recall, No Nonsense Forex trading strategy requires us to open up 2 trades because we're going to be scaling out of trades when we take profit. So we're not going to be coding that up straight away, but just to prepare us for that, I'm going to be putting in the requirements to open up 2 trades. Using the strategy entry function, we're going to be opening up a entry long 1 with the comment long entry 1. The direction, of course, is strategy.long, which is long, and we're going to be opening up the quantity, which is position size divided by 2, and it's divided by 2 because, of course, we're opening up 2 trades. Now, likewise, we've got ID equals to entry long 2, and we've got a long entry 2, and the strategy direction is the same, position size is the same. I just want to note that it is really important to have a unique identifier for each of these trades, entry long 1 and entry long 2, because we are going to be taking profit only on entry long 1 and not on entry long 2. And likewise, we have very similar conditions for short entries. We've got entry short 1, entry short 2, and of course, strategy direction is shorts. Position size is, of course, divided by 2. Now we can test this out again, add this to chart, and this is actually going to be taking trades for us, and we can actually see here, strategy tester is actually working. We can see here that the trading strategy has actually taken trades for us, like so. So now we've got a trading strategy that enters trades. Well, we need a trading strategy that of course exit trades, and that exit is going to be when a take profit or stop loss level actually hits. So let's go back into TradingView and let's code up our take profits and stop loss levels. So the very first thing that we can do is actually calculate some take profit and stop loss conditions for our trading strategy. The very first thing that I'll be putting in is a neat function which actually calculates the entry price for the current trade that we're currently trading, which is as follows. The next thing that we need to do is actually store the ATR at the time we have taken the trade, because that is going to be the value of which we are going to be setting our take profit and stop loss. So the way we do that is setting a variable called entry ATR and set it as a float variable of 0. We then put in an if condition. If strategy position size is equal to 0, or there was a long trade, or there was a short trade, then we want to store the ATR. We then set entry ATR equal to the ATR, which is calculated in a previous step. Else, if that condition is not true, then the entry ATR is equal to the entry ATR on the prior candle. So at any time you want to find the value of a past candle, you can use these square brackets and state how many candles you want to look back from. In this case, we're only looking back at the past candle, so we're only looking back one value. And that is how we store the entry ATR. We can now add in some money management calculations where it calculates the risk profit and the risk loss, which is essentially the entry ATR times the ATR multiple profit and the ATR multiple loss. From here, what we can do is calculate our profit for long trades. And I'm going to declare profit underscore L as a float variable. And I'm going to again put in an if statement. If the position trading size is greater than or equal to 0, profit longs is equal to the entry price plus the risk profit, else it equals to NA. All this is doing is stating that when we have long trades, then our long profits is equal to the entry price plus the risk profit. We can now do a similar thing for our stop for long trades, where stop longs is equal to a float. If the strategy size again is greater than or equal to 0, then our stop longs is equal to the entry price minus risk loss, else our stop long is equal to NA. We do the exact same thing with short trades, starting off with profit shorts, where our profit shorts again is equal to a float. If the strategy size is now less than or equal to 0, then profit shorts is equal to entry price minus risk profit, else equal to NA. Else for stop shorts, again equal to float. If the strategy position size is less than or equal to 0, then stop shorts is equal to entry price plus risk profit. Now with all that done, what I'm going to do is add in the following plot functions. And all this is going to do is plot the long and short conditions above for all long and short trades, take profit and stop loss levels. And finally, in our exit orders area, what I want to do is add in the actual order conditions for the trading strategy to actually exit the trade when any of the money management, take profit or stop loss conditions are met. Now, the way we're going to be exiting long trades is by using the strategy.exit function. This is going to be exit long trade 1, and we're going to be exiting from the entry, which was entry long 1, which we declared previously. We're going to leave a comment for the user, long exit 1, and we're going to exit when the stop loss is equal to stop L that we just defined, and limit, which is our profit, is equal to profit L, which we defined. Now, of course, that is going to be for our first long entry. Now, again, as mentioned, we got a second long entry, which is essentially the same above, only exit L2, entry L2, long exit 2. We've got a stop loss at the same level, and we've got a limit at currently the same level. We're going to be exiting shorts using the same strategy exit function. We're going to be exiting from entry short 1. We're going to leave a comment, and we're going to be exiting when our stop short is met, or we're going to be taking profit when our profit short is met. Likewise for our second entry condition. Now from here, fingers crossed everything works. What I'm going to do is add this to chart. Now this is actually going to be a good time to test to make sure that the strategy is actually working as is. So we can see here that this orange label has shown, and that is an indication that all of our trading strategy conditions are met for our condition 1. We can see here that because that has been met, we've actually entered a trade on the confirmation of the candle close, which is on the open of the next candle. And we can see here that we've got a long trade. We can see here that our take profit and stop loss bars have been shown, where this would be 1.5 times ATR away from the entry price as a stop loss, and a take profit is actually 1 times the ATR away from the entry price, which is a take profit. We can see here in this instance that we've actually taken a profit on both entries. We've got long exit 1 and long exit 2 exiting at the same time. Now what's really useful is we can go here and play with the settings. We can see here that we can play with the settings of the Arun length, the DPO length. We've also got the conditions for the start days, the end days for our date time range, as well as the ATR multiple here as well. Now that actually wraps up chapter 1, which is coding up our simple no nonsense forex trading strategy, where we have a few indicators as well as an entry and exit conditions that the trading strategy actually takes some trades. Now, I would encourage everyone to take a pause here and actually double check their work and actually have a play around with the code to see how everything is operating. Use the settings within your trading strategy to play around and optimize the trading strategy and the indicator variables within the code. So that way you get a feel and understanding in terms of how everything is operating. I'd also encourage to make sure that your trading strategy is operating as it should, that it's taking long and short conditions, entering and exiting trades based on the trading strategy conditions that of course you've coded up. Now, if you have checked all of that and everything's working as it should, well, I think that's a huge congratulations, because you've coded up your very first no nonsense forex trading strategy within Pinescript version 5. So now we can move on to the next chapter, and that is actually going to be coding up our basic no nonsense forex trading strategy, where we start to add in all the indicators within the no nonsense forex trading strategy, as well as some money management techniques as well. So if you know no nonsense forex, you'll know what indicator is likely to come next, and that is our volume indicator. And the volume indicator that we're going to be using is the ADX, and I've chosen this because we actually need to do a little bit of customization to the indicator and add in our very own horizontal line to make it essentially a zero line cross, or whatever value cross that we want to choose. You'll see how that all works a little bit more. So again, trying to add a little bit more complexity and a little bit more customizations, not only to the code, but to the indicator as well. And I'm going to show you exactly how to do that. So let's go into our no nonsense forex trading strategy code and start coding up our ADX volume indicator. Now to start off the next part, what we're going to do is add in a third indicator, which is going to be our volume indicator. And before we start anything else, make sure that you of course save your trading strategy. And what we're going to do is go into the indicator metrics and strategy section. And what we're going to do is find our next indicator, which is going to be ADX. And this is going to be the average directional index. And we're going to use that as a volume indicator. Now this is quite simply a zero line cross, although it's crossing a non-zero line, but another horizontal line, which you can put anywhere that you like. In my instance, I'm going to put in the conditions that if the ADX is greater than 15, then that means there's enough volume to take a trade. Else, if the ADX is less than 15, then there is no volume, and so we're not going to be taking any trades. So with that in mind, we can of course go into the code itself for the ADX and open that up. And we can see here the code is as followed. Now what we're going to do is highlight everything, copy it, going back to our NNFX trading strategy. We can go into our volume indicator section, which is over here. And like previously, we can insert our code. Now this one is quite longer than the previous, however, it's not that complex. It's just the calculations are a lot longer for the ADX, but the actual code itself is pretty straightforward. What we're going to do is remove version 5, remove indicator function here. We see here that we've got an ADX length, a die line, and then we've got some functions over here. Finally, coming down to the bottom, we got a sig variable, which is calculating the ADX. So this is actually what our ADX value is. And then it's plotting that sig value over here, which is color red. So we know and we can confirm that this sig value is actually the ADX line that is being calculated. So instead of commenting this, I already know which one it is. I can remove that. And in usual fashion, what I'm going to do is add in some commentary. All of this, I'm going to remain unchanged. That all looks pretty good to me. However, finally sig, I'm just going to call it ADX underscore signal. Now this one's an interesting one because as mentioned, this is very similar to a 0 line cross. However, the line is not at 0, it is a line at 15. However, I want to have functionality to be able to adjust that line depending on the optimization process that will occur after this. So I want to have the input functionality where I can adjust that 15 to be, well, whichever number that I want it to be. So what I'm going to do is actually put in some custom code at the top, and I'm going to call it ADX line, which is equal to an input function, which is input 15. I'm going to call it ADX signal line, and that is going to act as my horizontal line cross. So now that I've got a signal line and now that I've got a horizontal line, I can finally add in some indicator conditions. So scrolling down to the bottom, I can add in the following code. So I've included this variable called volume long filter, and this is going to equal to true when the ADX signal line, which is the ADX line, is greater than the ADX horizontal line, which is that 15 value. Now, likewise for short trades, it's actually the same condition where volume in this instance is non-directional. So the ADX signal line, which is the ADX, is greater than 15, or the ADX line, that is also going to be equal to true. So I'm going to be looking for long or short trades when the ADX line is greater than 15. Again, it's non-directional for this particular volume indicator. Now with that done, what I can do is actually go into my strategy conditions, which we coded up previously, and I can add in my volume indicator, and that's added in. Now, if I went in and actually added the training strategy with these new conditions, the volume indicator should also be included. And we can see here that there has been a change that has occurred. And if I go to the strategy settings, the ADX line is now shown. So now that I know that's working, that will be saved and I can go on to the next step. So I hope you're able to follow along in that little bit of code, adding in a volume indicator and also making a little bit of tweak and customization to that indicator. Now, the next indicator we're going to be adding in is, of course, our baseline indicator. And that baseline indicator is going to be the simple moving average, which of course is an on-chart indicator. So, of course, let's head back into TradingView and code up our baseline indicator. Now we're actually going to add in our final indicator, and that is going to be our baseline indicator for this particular example. What we're going to be doing is just adding in a simple moving average. Again, what we want to be doing is going to indicator metrics, moving average simple, and add that to chart. Now we're going to be adding a 100 moving average. 9 is a little bit too fast for me. 100 moving average as shown, and that's going to be the example that we're going to be using today. Now I'm going to go into the source code. Again, copy everything that's within this code. Go to open NNFX trading strategy, and we're going to go into baseline indicator. Going to add in all the code, and that's quite a bit, but we're going to be reducing that quite significantly within the code. Now this is going to be a good example where this is far too much for what we actually need it for, and we can actually simplify a lot of things if we understand the code itself, so we can actually give this a go. So what we're going to be doing is removing version 5. We're going to be removing indicator. The length is going to be equal to 100. So I'm going to make a change here that the default value is going to be equal to 100. There's also this source, offset, and then out. And that is essentially going to be a built-in function, which is going to calculate what the moving average is using the source, which is shown here, and the length, which is shown here. So really everything else we actually kind of don't need, because that is all that we are going to be actually using in this particular case. So we're going to give this a go and actually remove all of this. We don't actually need all of this functionality. This is only here if you want to switch between simple moving average or all the other moving averages. Now, if you want this to be in here, then by all means you can include that in here to give you the functionality to switch between the different types. However, just for simplicity for this example, I'm going to remove it. I won't actually need any of this information either, because that was based off the previous functionality. So let's remove that and give that a go. This plot function, of course, is going to be plotting the moving average, which was the blue line. So we can confirm that this out is the appropriate one, and we don't need this offset input function here. What I'm going to do is add in a comment, move that up, change the names over here to, let's call it MA_length. This plot function we don't need. Source is MA_source. And out is going to be MA_out. Now what I'm going to do is actually add in, for this particular case, baseline is equal to MA out. And so all you need to do if you're using this source code is actually put in your indicator variables over here, and then just specify what your baseline is, which in my case is baseline out, and then insert that variable over here, baseline out. That means that the following will not need to be changed, which is going to be our filter conditions for our baseline. So baseline long filter is going to be equal to close is greater than baseline, or baseline short filter is going to be close is less than to baseline. So you wouldn't need to touch any of this. All you'll need to do is change what your baseline value is. Now down in the entry conditions area, we want to add in our baseline condition. I can do that by adding in and baseline long filter and baseline short filter, and that will take into consideration our baseline trades. As mentioned, we can actually use the strategy to plot on chart indicators, and the baseline is of course an on chart indicator. So instead of using this indicator that I added in before, which was the SMA, I'm actually going to remove that, and I'm going to go into my code and actually code it up myself. Now I'm not actually going to code it up in this section. What I'm going to do is actually leave this section because this is actually complete, and go into this section here, which is the user input conditions section, complete. And I'm going to put my first code in this section, and that is going to be plot baseline color yellow, and that is all it's going to be. I'm going to re-add this to chart, and we can see here that the baseline is now plotted. If the baseline value was to change, where I can see here length is equal to 100, if I change that to 50, the baseline does become a little bit tighter, looks a little bit better to be honest, and this is what the baseline would be. I'm just going to go up, and just to make it easier, where I've got baseline, I'm going to clean this up a bit. I'm going to call this MA length and MA source. Re-add that to chart. And we can see here that if I was to adjust it, I can see here that the MA means the moving average, which is of course our baseline. It all looks good. I can hit save, and we can move on to the next step. Now with our baseline coded up, that actually wraps up all the indicators that I'm going to be putting in this tutorial. Now for those that follow No Nonsense Forex, you'll be screaming at me saying, wait a minute, you forgot an indicator, that's the exit indicator. And you would be right. However, in this tutorial, I'm going to be using the C1 indicator as our exit indicator for this particular trading strategy. However, in the section itself, you can feel free to add in your very own indicators exactly the same way as how we've added in indicators before, particularly the C1, because we want to be sure that we are using the exit indicator as a trigger indicator, and you'll see that when we actually start coding up this particular section. So without further ado, let's go back into the code and let's code up our exit indicator for this trading strategy. So what I'm going to be doing is adding in the following code, which is simply exit long is equal to our C1 short trigger, and our exit shorts is equal to our C1 long trigger. Now our exit conditions must be a trigger event, which is essentially a crossover or a cross under event. And we can use the C1 indicator as mentioned as our exit long and exit short conditions. Now, of course, to exit long, we don't want to be exiting longs when there is a long trigger. We want to be exiting longs when there is a short trigger or the opposite signal. And likewise, we want to be exiting shorts when there's the opposite signal or a signal to go long. And this here is just some text just so that the user knows what is occurring here. Now, if you do want to add in a specific exit indicator, which is not the C1 indicator, by all means, you can do that over here, which is exactly the same as how we added in our C1 indicator, of course, as a trigger indicator. So you're looking for cross events, either a crossover or a cross under event. Now with this coded up, we can actually add in strategy conditions to exit our trades based off these conditions. What we can do is go into our very last section of the code, which is our strategy close orders section. And what I'm going to do is add in the following code. Now this one is fairly simple, where if our exit longs condition is equal to true, then we want to be closing the trade at a market close for entry long ones. Now likewise, we want to be closing entry long twos as well if our exit long indicator has suggested to do so. Now it's exactly the same for shorts. We're going to be closing our entry shorts ones and entry shorts two if our exit shorts indicator is telling us to exit the trade. And we can see if any of our exit conditions has occurred. Now the best way to test this out is actually to stretch the ATR profit and stop loss conditions, just so that the profit and stop loss doesn't hit, but our exit indicator does trigger. And we can see here in this example that for our trade, we actually went long over here, but then we actually exited the trade when there was a cross under of our rune or our indicator one over here. So of course our stop loss and take profit was not hit because they're quite wide here, but we actually exited the trade because of the crossover of the rune. So it looks like that is actually functioning quite well. We can test this for another short trade. See here that we've got a short entry. Our stop loss take profit is quite wide, doesn't get hit. And we've actually got close one and close two for shorts here. And that's when this crossover of the rune occurred as shown. Now back into Pine editor, that all looks good. I'm going to save, and that's our exits completed. Now great, now that we have our trading strategy coded up so that it enters trades and it exit trades at a take profit and stop loss level, and there's also an exit indicator coded up, we can start moving on to some of the more advanced money management techniques. And the first one's going to be scaling out of trades. Now, for those people that follow No Nonsense Forex, you would know that we have 2 trades on at a time, and we actually exit one trade at the first take profit level and let the second trade ride. So what we're going to be doing is going in and adjusting our code so that way we are taking profit at the first take profit level and letting the second one ride. Now, not only that, this will set up the next section, which is actually going to be showing you how to then add in a trailing stop loss for this particular trading strategy, the No Nonsense Forex way. So let's go back into our code and add in our scaling conditions. Now what we want to do is firstly go in and adjust our trading strategy. And what we can do is go to our exit orders area, and as mentioned previously, we don't want to be exiting our second trade. We want to let that trade ride and not take profit if a take profit target is hit at 1 times ATR. So we're going to be changing the limit to NA, which means that we're not going to be taking profit for both our long trades as well as our short trades. Now this is going to adjust our trading strategy. And so let's see what that does. Now in this example, we got both long entry 1 and long entry 2 entering 2 trades on the confirmation of a entry signal to go long. We have taken profit on this first trade over here. We can see here that long exit 1 has occurred. So we've taken profit on the first exit, and we want to be trailing our stop loss as price continues to rise. Our trailing stop loss does rise as well. The first thing I want to do is actually clean up this green line. We can see here that because one trade is still open, the green line is still showing, which is our take profit. However, as we know, we're not going to be looking to take profit on the second trade that remains open. So what we can do is actually clean that up by putting in some additional conditions. So going through our profit longs section, we have an if statement already in there. However, we can add in an additional condition where if strategy open trades is equal to 2, then that's when we take profit. Else, if it's not equal to 2, so for example, if it's equal to 1, meaning that we've already taken profit off of one trade, then it's equal to 0. And this should actually fix our issue. I'll do the same thing for shorts. So for profit shorts, if strategy position size is less than or equal to 0 and strategy open trades is equal to 2, then we're looking for short take profits. Else, profit shorts are equal to 0. What we can do is actually add this to chart again. We can see here that it's just a little bit neater. So we can see here that the green bar is removed when the take profit is taken.
Now what we need to do is do our trailing stop loss.
Now that we're scaling out of trades, we can now add in our trailing stop loss conditions. Now, the No Nonsense Forex way of how we trail our stop loss is basically when our first take profit target gets hit, we want to move price to the entry price so that way we're actually locking in profit, and that is locking in profit on our first trade. The next condition is that, of course, when the price moves higher, if you're going long, or moves shorter, if you're going short, we want to be trailing our stop loss based on the ATR that was given when we entered the trade initially. So there's a few conditions that we need to code up. However, I'm sure you'll be able to follow along, especially if you made it this far. And if you are able to code this up, then this is going to be huge, because then you can utilize this in your very own trading strategy and future trading strategies within, of course, Pinescript. So let's go into Tradingview and let's code up our trailing stop loss.
So back into Pine Editor, we're going to be playing with our stop long section over here. Now, previously, if position size is greater than or equal to 0, we are just going to be taking a static stop loss, which is as follows. However, for a trailing stop loss, there's a few more conditions that we need to do. And so we're going to add in the following. I'm going to add in another if statement, and then I'm going to index what I had previously. And basically what this is saying is if strategy.open trades or we have entered long, then our stop loss is equal to what we had there previously. Essentially, if we have two trades open or we've just entered a long trade, then our stop loss is equal to entry price minus our risk profit, which is the very first condition. Now, alternatively, if our strategy open trades is equal to 1, meaning that we've already taken profit out of one trade, so there's only one trade remaining, then we can actually do trailing stop loss functionality. So that means that when we're using trailing stop losses, our stop for longs is equal to the maximum between certain conditions. The first condition is what was the stop loss previously? And the stop loss previously can be found by using the following. And this is, again, getting the stop loss from the previous candle. And we discussed this in a previous part of today's tutorial. But what we want to do is actually use this function called NZ, which just replaces any NA values to 0. The next thing we want to test is the current close minus the risk profit. Now, alternatively, as mentioned, the No Nonsense Forex way of taking stop loss or take profits is by moving our stop loss to the entry price as soon as the initial take profit target is hit. So what we can do is also include within this max function the entry price. And what I like to do is add in the following, which just places the stop loss just a little bit above the entry price. So that way, just with Tradingview, how it actually calculates, if your trade was actually exited at your take profit level exactly, then that actually counts as a losing trade. Just to calculate profitability, because I would actually count this as a profitable trade because we are taking the first trade off as a take profit. And that is how you calculate stop losses the No Nonsense Forex way within Tradingview using this function. Now, just to wrap up, if all of that doesn't compute, then stop loss is equal to NA, else NA. Now that's for longs. We can do the same thing for shorts. So if strategy position size is less than 0, I want to put in another if statement. If our strategy open trades is equal to 0, or we've just entered a short trade, then our stop loss is equal to entry price plus our stop loss level. Else, if our strategy.open trades is equal to 1, meaning that we've just taken off one trade, then our stop shorts is equal to now math.min, which takes the minimum value of the following variables. Our prior stop loss, in this instance, it's stop loss shorts from one candle ago, again, replacing all NA values, not with 0 in this instance, but with a very big number, because we don't want to put in 0 because that, of course, would always be the minimum number being 0. So you want to do the opposite, which is just a large number. We want to compare that to close plus the risk loss. And then finally, we also want to be checking whether the entry price in this instance minus 0.001 or just below the entry price, we want to be checking to see if that is also a minimum value as well. So our stop loss will then be the minimum of one of these three values, else stop loss is equal to NA. Now, nothing else should need to change if we've done it correctly. What we can do is actually test this out now. Add to chart. And there we go. Now we see in this exact same example, we've got long entry 1 and long entry 2. We've taken profit at 1 times ATR at long entry 1. And we're not actually exiting the second trade. We're letting the second trade run. We can see that the green line now discontinues because we are not taking any more take profits. And we are trailing our stop loss based on the maximum value of 3 variables. Let's see if we can find another example, this time of a short trade. And we can see here this short trade, and this one is another good example just to illustrate the entry price condition. We can see here that we've got a short condition, short trades have been entered, short entry 1, short entry 2. A take profit was hit, which you can't see in this example, but take profit was hit pretty quickly. And then we can see here that price is now moved to the actual entry price of the trade, which we can see over here. We can see here that it was the entry price for quite some time until we actually went down and closed candles lower than previous, moving our stop loss lower until we eventually exited the trade again at a decent profit. So that all looks good. What I'm going to do is hit save. And I would encourage you to do some further testing before moving on to the next step.
Now, I hope you're able to follow along and code up your trailing stop loss. And if you did, well, I think that is a huge win. Now, we're almost finished our basic strategy. And the next part we're going to add in is actually adding in something different. And that is some user strategy inputs, I like to call them. Now, by the end of this small section, you'll be able to actually toggle on and off various indicators to actually not only test which indicators actually work, but which combination of indicators actually work. And this is going to be very, very important. So I think you'll actually be able to see the importance of this section and how powerful this is actually going to be. So without further ado, I'm going to show you exactly what I mean. So let's head back into TradingView and let's start coding up our very own user strategy inputs. So you might recall that we have included our indicators within this insert section, and we've got C1 long trigger, which is our confirmation 1 trigger. We've got C2 long filter, which is our confirmation 2 filter. We've got volume long filter, which is our volume indicator. And we've got baseline filter, which is our baseline filters, all for long and short trades. And then as a exit indicator, we've got exit long, which is our exit indicator that we're using. Continuation trade indicator will come later, of course, that is going to be quite complex. But now we get to this section. In the completed section, we got these areas over here, and this is where I want to spend a little bit of time just to add in some additional conditions so that way essentially we can turn on and off indicators. So the first thing I want to do is add in an input function, which is going to be for our C1 indicator. Now this is going to allow users to select whether they would like to use the C1 indicator as a trigger indicator. And the variable is going to be input C1 trigger. Input is equal to true, and it's going to be titled use C1 as a trigger indicator. Now what we can do is, with this stated, we can put in an if statement, and we can state that if our input C1 trigger is equal to false, meaning that we don't want to use it, then that means our C1 long trigger is actually equal to false in this instance. And that is it. Now we can do something very similar for our confirmation 2 indicator, where we allow users to select whether they would like to use the C2 but as a filter indicator. And we got input C2 filter is equal to an input, which is by default equal to true, which titles use C2 as a filter. Now we can do a very similar if statement, but this one is going to be a little bit different. Now, because this is a filter, if the input C2 filter is equal to false, then our C2 long filter has to be equal to true. Likewise, our C2 short filter must be equal to true. Now, this is because we are using this as a filter instead of a trigger, but with triggers must be equal to false if we are not using them as a trigger. So just remember that this is the right way of doing it.
Depending on whether you're using a trigger or a filter, you have to select the right one. Now we can do very similar things for our volume indicator. Same thing for our baseline. And you'll recall here that we've got a plot function for our baseline. That's going to remain unchanged. And finally, we got our final one, which is for our exit indicators. Now, lastly, just want to mention that our exit indicator does act as a trigger. And so if our input exit is equal to false, so we're not taking exit trades, then our exit long should be equal to false. Because of course, if it was equal to true, then we would be exiting the trades all the time. So I'm going to add this to chart and let's have a look to see what happens. So that looks like it has added. And if I go to the strategy settings, I can see down the bottom here that I have additional conditions over here. What I'll do is I'll open up this and we can simply have a play around. So using C1 as a trigger, we can see here that with this being ticked, we have trades. Now, if C1 wasn't ticked, then it doesn't really matter which other inputs that I use. We're not getting any trades because our C1 is a trigger and this is the main confirmation indicator. We can see here that if we add a second confirmation indicator as a filter, we can see here that that actually does quite well. It does reduce the amount of losing trades. Our trading strategy is a little bit more profitable and we have a little bit more green here. Let's see what happens when we add a volume indicator. Oh, we're kind of going backwards. We can see here that the percent profitable is relatively the same, but the amount of profit that we have has actually reduced. Baseline hasn't really helped us too much as well. We're going backwards again. And our exit indicator, we can see here that it does get us back up a little bit more and does help us a bit. We can see here that by utilizing this combination, our C1, C2, and our exit indicator, we can see here that that does give us the best results in this current format. So this is a good way to optimize your trading strategy by turning on and off particular indicators to actually see which indicators work and which ones don't, and see whether you can find better indicators. So that all looks good. What I'm going to do is go back in here, hit save, and that looks like it has saved quite well. Now with everything coded up, again, I would encourage you to take a pause here just to see if everything's working as it should. We've added in our other indicators, which is our volume, baseline, and also exit indicator. We've added in our scaling out and also our trailing stop loss methodology, as well as some various inputs so that way we can toggle on and off various indicators. Now, I would encourage you to make sure that all of these are of course working as they should based on the trading strategy conditions that you put into your very own code. Again, turn things on and off, adjust some variables just to make sure that everything is working as it should. Now, if everything is working as it should, then a big congratulations to you, because this means that you've been able to code up your very own basic no nonsense Forex trading strategy within Pinescript, a full automated no nonsense trading strategy where you have the power to adjust almost anything that you can within your very own trading strategy. Now that means we can move on to the final stages of our no nonsense Forex trading strategy, and that is to complete our no nonsense Forex trading strategy with all the bells and whistles. And this is what I call the more advanced section, because there's a few more advanced techniques and nuances that we are going to be adding in to our trading strategy. So we're going to be coding up the various other triggers as well as the various other nuances that come with the full package of no nonsense Forex. And the very first thing we're going to start off with is actually adding in our baseline trigger, and that is when price crosses the baseline, then that is another opportunity to find trades, not only looking for trigger signals from our C1 but also looking for trigger signals when the price crosses the baseline. So I'm going to show you exactly how to do that and exactly how the effects that that particular technique has on our trading strategy, which I'm excited to show you. So let's go back into Tradingview and let's code up our trigger baseline. So the first thing that we're going to be doing is looking at alternative triggers, and that is going to be our baseline cross trigger. So our first trigger that we have is when we have a trigger condition of our Arun indicator, a crossover or cross under of the Arun. However, another way of triggering a trade is when the price crosses above or below the baseline as shown here. If I zoom in into this example, we can see here that we have a large candle that has crossed above the baseline. We can see here that we are now using the Arun as a filter indicator instead of a trigger. And we can see here that the orange line is above the blue line, which is indicating bullish trend. We can see here that the DPO just over here, if I hover over it, the DPO is positive, meaning that we are also in a bullish trend. And the ADX, which is over here, the ADX is showing 19.85, which is above 15, which means that we have volume to enter a trade. So by the end of this, we should hopefully code some conditions where we are entering trades based off a baseline trigger, which is the price close crossing above the baseline. So opening up our No Nonsense Forex trading strategy. The first thing I want to be doing is going up into our confirmation 1 indicator and adding in conditions where our confirmation 1 indicator is actually now not a trigger indicator, but a filter indicator. So for the C1 indicator, I've added in additional line of code where C1 long filter in this instance is equal to Arun upper being greater than Arun lower. Likewise, C1 short filter is equal to Arun upper less than Arun lower. And these two variables are going to act as the C1 filter variables. What I'm going to do is go into our C1 input section, and I'm going to add in very similar code as to what was used in the C2 input area, where I'm going to allow the user to select whether they want to use the C1 as a filter. I've got this input C1 filter, which by default I've included as input to false. The title is use C1 as a filter. And we got if input C1 is equal to false, then we want C1 long filter to equal to true and short filter to equal to true. Again, exactly the same reasoning as what we explained before, because filters must equal to true if we are not using them. And that is our C1 done. We can go to the baseline now and actually code up our baseline trigger conditions in this example, where I'm going to squeeze this one just in the middle here, where our baseline long trigger is equal to now a TA.crossover, so a crossover of the closing price and the baseline. Likewise, a baseline short trigger is equal to a cross under of the close and the baseline. Again, very similar conditions, trigger conditions, as to the first confirmation indicator. Now, likewise, I want to go down into the baseline input section, which is this section over here. And now with the trigger conditions, I want to add in the user input function so that way they can toggle on and off the baseline as a trigger. So what I've done is I've added in at the start, allow users to select whether they would like to use the C1 indicator as a trigger. I've created a new input variable called input baseline trigger is equal to input false. Again, default value is false. The title is use baseline as a trigger. And then there's an if statement. If the baseline is not being used as a trigger, so it equals to false, then our baseline trigger condition must be equal to false. So baseline long trigger is equal to false. Baseline short trigger is equal to false. Now all that is looking good. We can actually go in and combine all of our trigger conditions in our condition section below. So you'll recall that we've got condition long 1 is equal to all of these conditions. Condition short 1 is equal to all of these conditions. And then we're plotting a shape for these long and short conditions, and we're plotting a label, which is the color orange. So what we can do is actually add in a new set of conditions, but now for our baseline trigger. So we can add in similar commentary, insert long and short conditions for a baseline trigger. All other indicators are filters. And as such, I've just added in the following code just as a copy and paste, and we'll go through this. So now we've got condition long 2. is equal to when strategy position size is less than or equal to 0 and date range. So exactly the same as the above. Alternatively, we are now using C1 as a filter, where above we're using C1 as a trigger. C2 remains as a filter, volume remains as a filter, but finally we got our baseline long trigger, and this means our baseline is now acting as a trigger, where alternatively in the first condition, baseline long is actually a filter. It's exactly the same for short trades, only we are taking short filters and a short trigger for baseline. We can then do a similar thing where we plot the shape similar to above. We're going to be plotting the shape, and I'm just going to be changing the color to color.teal, just so that way we can distinguish whether we're using C1 as a trigger or baseline as a trigger. Now, the final thing we want to do, just to make sure that we are entering trades based on our new trigger conditions, is when we got here, entry long, condition long 1, is we're entering long when our condition long 1 is met or our C1 trigger is met. We can put in an OR statement, and we can put in or condition long 2 is met. We can do the same thing for shorts. So we're going to be entering shorts if our confirmation 1 indicator triggers a short trade and the rest of the filters also confirm short, or our baseline trigger condition triggers a short trade and the rest of our filters say to go short. Now this should be enough for us to test the code, and hasn't done anything yet, but if I go into settings we can have a play around. Now we can see here that by default only our C1 is triggering, but if I change this to baseline trigger, we can see here that actually does quite a significant change. So we can see here that we've got use baseline as trigger. Yes, we are. We're still using volume and C2 as filter indicators, but we can see here that C1 is now being a filter indicator and not a trigger. Our baseline is now not a filter, it is a trigger only, but we're still using the C1 as an exit indicator. If we don't want to use the C1 at all, we can take out the exit indicator, and that wouldn't actually use the C1 at all. However, let's just add it in for now. Now this is really interesting because this is using an alternative trigger, but what we can do is actually turn on everything, and we can use both C1 as a trigger, but also include our baseline as a trigger. And let's go back to that example that we were looking at before, which is this one over here. And if I turn off the baseline trigger, we can see here that this is essentially what we had before, which is we were only taking trades on a C1 trigger. We can see here that the No Nonsense Forex states that our baseline crossover can be a trigger. And so if I turn this on, which is the example that we were going through before, we can see here that this is actually a trade. We can see here that price is crossed above the baseline. All of our other indicators said to go long. And then we've actually ended up in a long trade where we've got an entry on the next candle close, take profit, and then we trail the stop loss up. We can see here a similar example where, again, looking for this teal color, that means that this is a baseline cross trigger. We can see here that we've entered a trade, we've gone short, we've exited the first trade at a profit, but the second trade is exited at break even, still a overall profitable trade. We can see here that the trading strategy actually significantly performs much better with the new conditions. We can have a further play around to see what occurs if we change some of these conditions.
Now that's great. We have added in our baseline trigger and we've seen some promising results with that particular case. Now the next thing that we're going to be doing is adding in our final trigger condition, or trigger being our final opportunity that we can enter the market. And that is, of course, the continuation trades indicator. Now, the continuation trades indicator that I'm going to be using is again the C1. However, you can feel free to add in your very own indicator if you want to. Again, I've left the section there for you to do that. And so without any further ado, let's go back into Pinescript and let's add in our last trigger, which is going to be continuation trades. Now, the next way that we can enter in trades using the No Nonsense Forex trading strategy through an alternative trigger is through continuation trades. Now, this is when we have entered a trade, prices crossed either above the baseline, or we've entered a trade based on our C1 confirmation crossover or cross under. We have entered a trade, we have exited a trade, and price remains above, or if we're going short, below the baseline and doesn't cross over yet. This is a good example here where price has rebounded and hasn't crossed over the baseline and continues to go up, and we have an opportunity to potentially enter in another trade. Now, in this example, we've already entered in another trade because there was another C1 confirmation and all of our other indicators have met. However, if this wasn't the case, we can actually look for continuation trades. Now, continuation trades are a little bit more flexible. It doesn't require volume to enter in the trade. It doesn't require a few other nuances, which I'll go into in just a moment. It is a little bit looser, so there is more opportunity to actually re-enter into the market when price has not crossed over the baseline previously. So there's a few things that we need to do. In this example, we need to put together a little bit of a counter that actually tells us when price crosses over, when we actually have entered in a trade, when we've exited the trade and price has not yet crossed over, and then when there's an opportunity to re-enter the trade. Now, in this code, what I'm going to do is we only have the opportunity to re-enter into the market one other time. Even if the trend still continues to go up and there might be additional crossovers of our C1 indicator, we're not going to be re-entering any more times. We can only re-enter in one continuation trade, only one additional time, and we must wait until the crossover of price back to reset our counter. Now, back into Pine Editor, we can go to our Insert Continuation Trades Indicator section, and I'm going to insert the following code. Now, you don't have to mind this too much. This is just some commentary. However, all this is saying is that we are using the C1 trigger again as a continuation trade trigger. Our continuation long trigger is equal to C1 long trigger, and our continuation short trigger is equal to C1 short trigger. Now, if you wanted to add in an alternative indicator, for example, the MACD, you can feel free to add this over here. It's exactly the same as how we would add in a new indicator, which we have done previously. For example, the C1 indicator, you would do exactly the same here. Just to recall that our continuation long trigger is a trigger indicator, so the event is a crossover or a cross under event. Now, scrolling down to the complete section, the continuation trade section, this is where we're going to add in a few things. We're going to add in the input condition, and we're going to add in a counter, which is going to be the mechanism as to how we're going to count whether we can actually take continuation trades based on certain conditions. The first thing that we're going to do is put in a new input function called input continuation. And that is going to be input by default equal to false, and this is going to be use continuation trades. We're going to declare a new variable called continuation counter, and that is going to be by default equal to float 0. And now we're going to put in some if statements. The first one is if there is a cross of the baseline and the price, then the counter resets, and that resets to 0. So if TA cross of close and baseline, then count equals 0. If there is a new trade that is found, then we're going to add 1 to the counter. So else if strategy position size is not equal to 0, meaning that we have entered a new trade, and the previous strategy.position size, so previous being 1 candle before, is equal to 0, meaning that a new trade has been entered, then the count is going to be equal to count plus 1. Else if the trade is fully closed, then let's add another 1 to the counter. So else if strategy.position size previously is not equal to 0, and now strategy.position size is equal to 0, meaning that we have now closed the trade, then let's add
1 to the count again. Else, if none of the above is equal to true, then all the count is equal to the count previously. And that is how we create this counter. Now what we want to do is be taking continuation trades when we have the following conditions, and that is the indicator continuation filter is equal to the input continuation is selected to true, and the count of the continuation is equal to 2. Now, we always want to be looking for continuation trades when the count is equal to 2. If the account is less than 2, that means that we are already in a trade or we haven't taken a trade. If it is equal to 2, then that's when we want to be looking for continuation trades. And if it's greater than 2, that means that we have already entered into a continuation trade and we don't want to be looking for any more continuation trades after that. Just to illustrate this a little bit easier, I can put in some plot functions. And this is enough to complete this section here. We must add in the entry conditions in the appropriate location. So going into the entry conditions section, just below conditions 2, I'm going to add in the following code. Now what this is saying is that we're going to be looking for long or short conditions for continuation trades. All other indicators are used as filters. Again, condition long 3, we're looking for trades where position size is less than or equal to 0 and we're in the date range. We're looking for the continuation trigger. Our C2 is acting as a filter. Our baseline is acting as a filter. And we've got this new condition indicator continuation as a filter. Now notice here that we're not using a volume indicator, and that is because as per the No Nonsense Forex way, we are not using our volume indicator as a filter. Likewise, we're only using our C2 as a filter and not our first confirmation indicator. Now, although our first confirmation indicator is being used as a continuation trade trigger anyway, if you are using an alternative indicator, for example, a MACD, you can either use the C1 in here or you can choose to omit it. In this case, I've chosen to omit it and we are only using C2 as a filter indicator in this example. Now, shorts is exactly the same, just the opposite way, of course. And just to note here that indicator continuation filter is non-directional, so it equals the same. I've got plot shapes here. In this case, I'm plotting color purple just to indicate what is a continuation trade. And then over here, of course, we can add in, and that is going to enter trades if condition 3 is also met. Let's add the chart, and it looks like that has compiled. Let's see how it goes. Use continuation trades. And we can see here that this is now a continuation trade. Now, although previously it did trigger as a long trade because volume, of course, was high, this has now been overridden as a continuation trade. We can see here that we've got numbers that are shown over here, and we can see what this actually does because this is our counter. So again, going back at this example, we can see here that price has now crossed above the baseline. We've entered the trade fairly quickly, and we can see here that the counter now equals to 1 because we have entered the trade. We have then exited the trade, so our counter then goes to 2. And we can see here that there's no crossover or under of the baseline, so the counter doesn't reset. And now the counter goes to the value number 3 because we have entered in a new trade and the price hasn't crossed the baseline. So this is technically a continuation trade. The counter still counts 3 until, and it won't enter any additional continuation trades until it crosses back below the baseline and the counter resets. And it stays like that until a new trade is found. And we can see here is another example of a continuation trade. The counter reset previously, hasn't entered a trade until now. Price closed, price re-entered on a continuation signal. This is actually a good example because we can see here that volume is actually relatively low. It's below the 15 mark, so it actually doesn't enter a trade on normal conditions. However, this is a continuation trade condition, so volume doesn't take into account here. And we can see here that this is a good example of a continuation trade where we actually wouldn't have actually been in this trade if we didn't have those conditions. So if I actually turn this off, we can see here we actually didn't enter that trade because the volume was too low. But based on the continuation trade methodology, we should actually be entering this trade based off continuation trades. We can see here that the trading strategy does do a little bit better with continuation trades on opposed to continuation trades off. Actually does much better. And then with all trading signals on, doesn't do bad at all.
Wow, all the triggers are done. And that means that we're on the home stretch of completing the full No Nonsense Forex trading strategy. And the last parts we're going to be adding in are our nuances. Now to start off with, we're going to do an easy one, which is the one candle rule. And the one candle rule basically means that when we have a crossover of our C1, we can wait one candle for all of our indicators to catch up. Now this is actually quite easy to code up within Tradingview, and I'm going to show you exactly how to do that. So let's go back into our code and start coding up our one candle rule. We're now going to get stuck into the nuances of No Nonsense Forex, and the first one we're going to do is the one candle rule. Now this one's actually pretty easy to implement, so let's have a go at that. What we're going to be doing is going into the one candle rule section of the completed section. We're going to add in the following input variable called input one candle rule, and this is by default going to be equal to false. We can add in the following if statement. So if the one candle rule input function is equal to true, if the prior candle confirmation 1 told us to go long, and if our confirmation 1 long indicator 2 candles ago is equal to false, then our C1 long trigger is actually equal to true, meaning we have our one candle rule condition met. Likewise, we have the same for shorts. If the input is equal to true, our C1 short trigger 1 candle ago is equal to true. However, our C1 short trigger 2 candles ago is equal to false. And this is essentially how we code up our one candle rule. Fortunately enough, we don't actually need to make any other changes because this feeds into the rest of the code, so we can actually see what this does. So we've entered a trade here based off the one candle rule, but we can see here that the crossover has actually occurred on this candle here. So this is actually a long crossover. However, our DPO is actually minus 0.43. Now, because it's minus 0.43, we have actually not entered the trade previously. However, on one candle following, we can see here that, of course, the Arun 1 candle ago showed a long signal. Our DPO has now caught up and we are now at a positive value, and our ADX is still above 15. So this is actually a one candle rule long confirmation. Now this example just happens to be a losing trade. However, just to illustrate the example, this appears to be working quite well. So that one was an easy one. Well, at least I hope it was easy for you as well. And so that means we've nailed one of our 3 nuances. The next one we're going to be doing is the bridge too far rule. Now, unfortunately, this one isn't as easy. However, it utilizes very similar principles to our continuation trades, and that is to add in a counter. So for those that are quite studious with the No Nonsense Forex trading strategy and like to include all the nuances, well, let's add in the bridge too far nuance.
Our next nuance is going to be the bridge too far rule, and that is going to occur when we have a trigger event of our C1 indicator. We want to be counting from that C1 trigger indicator event, we want to be counting a certain amount of candles after that event occurs, and we want to be taking trades only within that range. In this particular case, we're going to be looking for a range of 7 candles. So when a trigger event occurs on our C1 indicator, we can only be taking trades within that range of 7 candles. Now that means that we're going to have to use, again, another counter. So when a crossover occurs, we count how many candles that have been since that crossover event for us to be looking for any trades. So going back into our code under the bridge too far section under complete, we're going to be adding in 2 new input variables. That is going to be input variable bridge too far filter, which by default is going to be equal to false. And that is going to be the input function to be using the bridge too far rule. We're also going to be putting in a input value for the range we want to be looking for. In this case, it's going to be a range of 7 candles. The next thing we do is put in a float value called count bridge too far. We want the counter to reset when our C1 long trigger has occurred or our C1 short trigger has occurred. The counter resets to 0. Else the counter bridge too far is equal to the previous count plus 1. Now what we can do is add in the trade functionality for the bridge too far rule. By default, what we're going to do is add in bridge too far filter is equal to true by default, and then follow that up with a if statement where if we are using the input function bridge too far filter and the count of the bridge too far is greater than the input range. So in the instance where the crossover has occurred greater than 7 candles from the crossover, this would be equal to true. Therefore, we want to not be taking trades within the trading strategy, so the bridge too far filter is equal to false. To illustrate, what we can do is actually use a plot shape function where we would plot the bridge too far filter and plot that only when the input bridge too far filter is active. We want style equal to circle, and we've got a nice fuchsia color. Now, because this is a new filter, we need to go down to our entry conditions filter section. And the bridge too far rule affects our condition long 2, which is our baseline trigger indicator and filters. So we'll scroll to the end and we'll need to add in our new filter, which is the bridge too far filter for both long and short trades. Now this will be enough to add to chart, and we can have a play around. So we can see here that by default nothing happens. Now I want to show you that if we use the bridge too far rule, we can see here that nothing changes because we need to be using the baseline trigger and C1 filter for this particular case. So I'm going to be adding in baseline trigger and C1 as filter. And we can see here that we have a significant increase in our profit. However, let's have a look to see what bridge too far will do. Now, bridge too far does reduce our profitability. However, it does make a difference to our trades, meaning that it does something. So let's see if we can find an example. So with bridge too far rule off, we can see here that in this instance, we have taken a trade. This is our baseline trigger trade because we have that teal color. You can see here that in this instance, it's actually a profitable trade. However, if we use the bridge too far conditions, let's put those on. So over here, we have a cross under of our confirmation indicator. And what the bridge too far rule does is it counts 7 candles, 1, 2, 3, 4, 5, 6, 7. And if there are no trades that occur within this 7 candles for a C2 trigger indicator, then we actually do not take a trade, which is what has occurred here. So the cross under of the price and the baseline has actually occurred on the 8th candle, and this is why the trade was filtered. Now, if I was to increase the bridge too far to 8, we should see that that trade has actually now been added in. So we can see here that it is working quite well.
Well, that's 2 out of 3 nuances done. So let's move on to our very last part, and that is our last nuance, and that is going to be the ATR rule, or more specifically, the 1 times ATR rule. Now, I'm going to add in some code where you don't have to use 1 times ATR. Of course, you can adjust that if you like. You can use 2 times ATR, or even what I'll show you, 0.1 times ATR, whatever the case may be. You've got the opportunity to make this trading strategy your own. So if you are using this nuance, let's go ahead and see how we code that up within our very own trading strategy.
Now finally, to complete our last piece of code, we're going to be coding in the baseline and ATR rule. So essentially we want to be calculating whether price is within the range of a ATR multiple between the baseline. So we want to be looking for price to close within 1 times the ATR of the baseline, or 1 minus the ATR of the baseline, or whatever multiple you are looking for of the ATR within the baseline. So this is actually going to be fairly simple to code up compared to some of the other things that we've been coding up. So it should be fairly straightforward for you if you've been following along. So the first piece of information is going to be the input variables for our baseline ATR. So the first one is going to be whether we're using the baseline ATR function rule. And then finally, we're going to be coding in a ATR multiple, which is going to be 1 as a default value. So whether you're using 1 times the ATR from the baseline or whatever multiple you want to be using. The calculation is fairly simple, where we've got the baseline ATR upper equal to the baseline plus the multiple times the ATR, and the baseline ATR lower equal to the baseline minus the baseline ATR multiple times the ATR. Now the next thing that we can do is add in our baseline ATR filter conditions, which is as follows. Our baseline ATR filter by default is equal to true. However, we can put in an if statement where if the input baseline ATR is equal to true, so if we are using the baseline ATR rule, and in brackets we can put in an or statement. If the close is greater than the baseline ATR upper, or the close is less than the baseline ATR lower, then the baseline ATR filter is equal to false. Essentially, this is saying that if the close is outside of the range, then we are not looking for trades. We can then add in additional code to plot this, where we can plot the baseline ATR upper and baseline ATR lower when we have the input baseline ATR activated. Now the last thing that we need to do is add in our new filter to our condition long 1 and condition short 1, as well as our condition long 2 and condition short 2, which is our confirmation 1 trigger and baseline trigger events. Now this does not impact the condition long 3 and condition short 3, which is our continuation trades, because by No Nonsense Forex standards, this particular filter, being the ATR baseline rule, does not impact our continuation trades. Now we can simply go to the end here and add in our filters for our condition 1 and condition 2, long and short conditions. Now this is enough to add to chart, which I've just done, and we can have a look to see what happens. If I open up the settings, scroll down to the bottom, we can see here that the ATR rule, when activated, does impact our code. We can see here that in this particular example that we have entered a trade over here and we've entered another trade here. However, when we add in the 1 times ATR from the baseline rule, we can see here that it is outside of the range, so that trade is not taken. What's interesting is if we actually use continuation trades, which is the same example that we did use previously for the continuation trades, we can see here that now this trade is back on, but not as a standard C1 confirmation trade, but now as a continuation trade, again with slightly less variables. So just for demonstration purposes, I have narrowed the condition so that it is only between 0.1 of the ATR, but just for demonstration purposes, I wanted to demonstrate that it does work on not only C1 as a confirmation, but also baseline as a confirmation trigger. We can see here that trades do get removed if price does close outside of the range.
Wow, and that completes our full No Nonsense Forex trading strategy, and more specifically the advanced section of this tutorial, where we've utilized some various different techniques to get, well, the full No Nonsense Forex trading strategy to work. Now, in this section, we've added in 2 additional triggers, which is our baseline as well as our continuation trades, as well as added in, of course, their conditions, and then added in the nuances of the No Nonsense Forex trading strategy strategy within our very own code, where you not only have the nuances, but also have the flexibility to adjust them to fit your particular trading strategy. Now, of course, when it comes to the end of these chapters, I do recommend having a pause and making sure that everything is working as it should. Play around, turn things on and off, adjust some variables, and really see and make sure that the trading strategy is working as it should. Of course, if it is working, well, then you can have some fun and actually start optimizing your very own full no nonsense forex trading strategy, and now I think have the confidence to add in your very own code and maybe even your own nuances to really make this trading strategy your own. Now this actually gets me really excited, and what better way to actually wrap up this tutorial and this part of the code than by actually going in and having to play around ourselves, so that way we can really see how powerful this no nonsense forex automated trading strategy in Pinescript really is. So let's go back into Tradingview and let's have a play with some numbers. Now, although it is getting a little bit convoluted on the page, we can see here the power of this particular trading strategy. We can see that all our indicator variables are here for us to change where required. We've got our start date functionality, percentage risk per trade, and other money management techniques such as the ATR profit and ATR loss multiple. We've also got, if required, our ATR length and smoothing functionality. And then we've got our various conditions. We can see here that no trades are taken because we don't have a trigger activated, but with a C1 activated, we can see here that we are taking some trades. We can add in some additional filters like a C2 filter, volume filter, baseline filter, and exit indicator. As shown previously, just by using the C1 as a filter for this particular trading strategy on this currency pair and in this date range, this seems to be working quite well. However, let's add in now a C1 filter with a baseline trigger. You can see here the trading strategy is still performing quite well with significantly more trades, however. Let's see what happens when we add in continuation trades. Doesn't do too much. One candle rule, again, doesn't do too much. Now we can start filtering out some trades, bid too far. And then maybe finally the ATR rule, which does reduce the profitability but significantly reduces the amount of trades that we have, which is probably better because we are now not utilizing as much risk. The profit factor has increased quite a bit, as well as the percent profitable. So you can continue to play around with these, turning things on and off, or even going in and adjusting things like your profit, stop loss, take profit. You can then do in sample and out of sample testing. And you can see here that this particular trading strategy still performed quite well, even when tested out of sample. Now that actually comes to the end of this very long tutorial where we've been able to create our full no nonsense forex trading strategy from start to finish. And if you've been able to get this far and everything's working and you've been able to follow along and maybe even make your own trading strategy where you've added in your own indicators or even nuances, well, huge congratulations to you, and I'm super glad that you were able to create your very own full no nonsense forex trading strategy. Now, as mentioned, the code's in the GitHub to this tutorial, so that way you can validate the work that you've been doing or even use this code as a template for future no nonsense forex trading strategies that you might have. Again, this took months to prepare and actually utilized a lot of my experience in coding, particularly no nonsense forex trading strategies over the past few years. So if you have enjoyed this long tutorial and if you have created your very own no nonsense forex trading strategy, then leave a like, leave a comment, and if you don't mind considering subscribing, that would be of course greatly appreciated. And if not, well, that's okay, because that just means that we have some further work to do. So I'm not going to let this tutorial go on for any longer. I hope you have a great day. Happy trading, happy no nonsense forexing, and I'll see you in the next one.